Coming to kinds of share capital. Now students, at the top we have authorized share capital. That is the capital which is mentioned in the memorandum of association. It is also called as registered capital, and it represents the maximum amount of capital which a company can raise in its entire life. This is further divided into two parts, issued and unissued. That is, issued means the amount of shares which have been offered to the public, whereas unissued means the number of shares which have not yet been offered to public for subscription. Issued can be further into two types as subscribed and unsubscribed. Subscribed capital represents that part of issued share capital which has been taken up by the public, whereas unsubscribed capital refers to that part of share capital which has not been subscribed for by the public. It represents the unsold amount of shares out of this issued share capital. Then in subscribed we have called up and uncalled capital. Called up capital means the amount which has been called up till date. It includes application, allotment and calls that have been made till date. Whereas uncalled represents that amount of capital or that amount of value of share which has not yet been called till date. Out of called up share capital, we have paid up capital and calls in arrears. Here, paid up capital represents the amount that has been paid by the public, and calls in arrears represents that amount which has not yet been paid till date. Now students, unissued capital remains as it is. It will become issued only when a new prospectus is issued or a fresh applications are sought by the company. The uncalled capital can be further divided into two parts, that is unreserved capital and reserved capital. Students, reserved capital represents that much amount of unpaid value which the company has declared to be reserved, and by that the company means that this amount will not be called up until the time of liquidation of the company. That is, the amount of uncalled that has been declared as unreserved capital cannot be called up before the time of liquidation. Then unreserved capital means the opposite of it, the amount which can be called any time before liquidation when the company requires certain sum of money. But obviously understand this point that the total value called by the company cannot exceed the issue price.